Warm welcome to all of you on behalf of the Maharashtra Ophthalmological Society. Me, Dr. Daswala, as the president of the Maharashtra Ophthalmological Society, had promised you to have the literacy series, financial literacy series, and there we are up with the fourth webinar, which is going on in tune with what we have already promised. We have our chairman of the financial MOS Financial Literacy Committee, Dr. Kulin Kothari, who is going to give us an idea about how we are going to have today. He has got a very good friend, a solicitor and an advocate to brief us on the planning of succession and will. A very senior advocate, Mr. Viren Miskita, with us. So we are honored to have you both. So over to you for your comments, sir.
Yes, thanks, Dignesh. I will start like this, that there are only two things which are definite in our lives, and one is the birth and the other is the death. And birth, all of us know where we born, we celebrate our birthdays very well. But as far as the death is concerned, again, there are two things which are very important. That preparation for the death whenever it comes, maybe 50 years down the line or 10 years down the line or whenever. And the second part, which is probably not in our hands, is to celebrate anybody's death, especially when a person has done a lot of good things in life. That's, of course, remains with our friends and relatives to celebrate our death or somebody's death. But coming to the first point, that how do we prepare for the death? There are various things to be prepared, even from some philosophical point of view, even from many things. But today's relevant topic is, we sometimes, because of various reasons, maybe we are too busy in our profession, maybe we are too negligent about something, and most important, psychologically we feel that death abhi marne ka to bahut time hai abhi, it's not tomorrow, it's not day after tomorrow, and that is these are the reasons why we don't focus on our assets. We spend a lot of time on our profession. We spend a lot of time in earning money through our profession, through our investment, through our businesses or whatever. But and talk about assets and asset allocation and how do we increase our net worth, etc., etc., etc. But the part B, which is how do we distribute this wealth when we are not there, and all of us, nobody is here with permanent visa in this planet. So whenever we are not there, how systematically we think about that is up to us. But what are the legal aspects of doing this activity? That is our very, very dear friend, Mr. Viren Miskita, is here with me. I know him for about 5-6 years, but in this 5-6 years, I have become a very, not only friend, I have become his fan, Mr. Miskita. And I really love you for your so particularness. And I've experienced, he's so specific, so particular and crisp about every single thing. So today I thought that he is the best possible speaker for the subject. And with this kind of opening remarks, I leave to Rajesh for a formal short introduction, followed by Mr. Miskita's talk, which all of us are looking forward to.
Yes. Thanks, sir.
Yeah, thank you, Kulin sir. I feel very happy to introduce Mr. Viren Miskita to all of you. He has been practicing advocate and solicitor of Bombay High Court for over 27 years and is known for his depth knowledge of local, state, and federal law. And he has got considerable experience in complex real estate, corporate, and commercial transactional work. In the course of his practice, he has attended to substantial transactions in Mumbai and in other parts of India. He has played a role in some of the largest real estate transactions in India, including commercial and residential real estate sales and lease, urban and rural property acquisitions and developments of special economic zones, townships, and IT parks. He has to his credits many accolades and recognitions. He has been a top-ranked brand one of real estate lawyers in India in the Chambers and Partners Asia Guides in 2009, 2010, 14, 15, 16, 18, 19, 20, and of course, maybe 21 also, it is not there. Published by Chamber and Partners UK. He has received the Client Choice Award in 2012 for Commercial Real Estate India for International Law Office UK. He has been invited as a panelist at the Indian National Bar Association's 17th Constitution Day on 26 November 2019 to speak on topic globalization of Indian companies, tax and regulatory issues, and why the UAE is ideal for Indian companies. With this, I present to you Mr. Viren Miskita for his talk.
Thank you very much, and thank you, Dr. Kotari, for your kind words. Like to start off by thanking all of you for taking your time out this evening to hear me. I'll try and make it as simple and clear as possible and not tie you up in a lot of legal language. And I hope by the end of it, you have a somewhat clear understanding of what succession is. Before I start, I must tell Dr. Kotari that I disagree. The two things that one is not sure about in life is not birth and death, but I think, or one thing that you're sure about is death and taxes. So I think there'll be a lot of people who will disagree about just birth and death. It's also taxes. And that's also a big part of succession and estate planning, which I'll get into. So should I start my screen sharing so I can?
Yes, sir. Yes.
Yes,
sir. Please.
Yeah. So I'll do that. So before I get into some of the slides and more detail, let me start off by trying to sort of explain to you some basic concepts. And you must have heard some of this language: intestate succession, testate succession, wills, succession planning, personal laws, etc. So I'll try and just give you a broad overview before we get into what succession planning is and how to do it. All of us in India, irrespective. Sorry, was there? Can you hear me?
Yes,
I
sir.
think some disturbance from. I think everybody else can mute it, please. Sorry for that, sir. I think,
No, not at all. So as I was saying, is that irrespective of one's citizenship, of one's residency, what happens is if you have assets in India, what will determine how those assets are dealt with is one's personal laws of succession. So we have no uniform civil code in India, except for the state of Goa. And therefore, each one of us, whether one is a Hindu or a Muslim or a Christian or a Parsi, are each governed by different laws of succession. The Hindus are governed by the Hindu Succession Act, Indian Christians by the Indian Succession Act, Parsis also by the Indian Succession Act, Mohammedans by Mohammedan law. And each one of these personal laws govern not only matters such as marriage, etc., but also succession on one's death. That is, who will one's assets go to if one dies? And I won't go into too much detail on the differences of each of these particular personal laws, but I can explain to you that one doesn't necessarily have to make a will. If one passes away, God forbid, without making a will, then the law of succession will determine how your estate is distributed amongst your heirs. So just as an example, if a Hindu male passes away intestate and his mother has died before him, then his heirs would typically be his wife and his children. They would be all class 1 heirs. And the estate of that person would be distributed in equal shares between his family members. Therefore, why a lot of people prefer to make wills, prefer to plan one's succession, is to have control over how one's estate will be dealt with after one's death and not have that determined according to the law of succession, which applies. I must add that while Dr. Kotari stressed on succession being what happens after one's death, today succession planning can also mean planning one's estate during one's lifetime, reorganizing one's assets, planning in such a way that those assets can be dealt with in a particular way, even while one is living. So I'll get into that in further detail in a little bit, but suffice to say that it is very necessary that one plans one's succession. We all, and especially professionals like you and me, spend our entire lives working to build up assets for ourselves and for our next generation and the following generation. And therefore, when we spend so much time and energy doing that, it is but natural that one day when we are no more, we should ensure that the assets that we have spent so much time and so much effort building up properly is dealt with, doesn't get tied up in litigation, doesn't get lost, and goes to the right people as smoothly and effectively as possible. And that is one of the primary reasons that one must plan one's succession and organize one's life so that the next generation and the one after that is properly secured and you avoid spending too much time with lawyers as much as we would like that. So let me start off by just explaining why one plans succession. Principally, in recent years, there are three reasons. One, which is the most important, is avoiding testamentary disputes. The second is hedging against the possible introduction of inheritance tax. Now, of course, the first one, testamentary disputes, one would understand that when one leaves a will, there is a possibility that anyone's heirs, who is an heir under the law of succession, can challenge the will on various grounds, mental incapacity, force, pressure, duress, undue influence, etc. So some people start planning their succession in such a way that part of their estate doesn't fall into the category of dealing with it under a will, which I'll come to a little later in terms of trusts and other vehicles. The second is hedging against inheritance tax. Now, what is happening is that worldwide, there are many mature jurisdictions, countries like the United States, UK, which have introduced inheritance tax. We had it until 1986. Now, of course, we have no inheritance tax since it was abolished. But there has been talk at some quarters that sooner rather than later, this will be introduced in India. And when that happens, whatever assets we leave by will may be taxed in the hands of our heirs and beneficiaries by the government. It's not yet 100% sure whether it will be introduced immediately, but at some point there is a pretty decent likelihood that it may happen. The last is ring fencing assets under the Insolvency and Bankruptcy Code, which at present does not apply to individuals unless you're a guarantor of a corporate. But there is and not many people know this, that the Insolvency and Bankruptcy Code has an entire section which deals with individual insolvency and claims. So to widen that topic, let me explain that we may have creditors, we may have demands from the government, and therefore one of the aspects or reasons or objectives of estate planning is sometimes to try and ring fence and safeguard those assets against claims of creditors, claims of the government, claims of taxation authorities, so that if an unfortunate incident does occur, those assets are insulated. And of course, I'll come into that in more detail later. This is a small slide on the Insolvency and Bankruptcy Code, just to give you a quick rundown what would happen if and when it does get extended to individuals. Creditor sends a notice of demand, then files an application to initiate insolvency proceedings. If that petition or application is accepted by the court, then there is a moratorium. A moratorium means that every single asset of yours is frozen. You cannot deal with it. No contracts can be enforced. All litigation comes to a halt. Basically, it is a stasis. After that, there is a resolution professional who's appointed. There is an adjudicating authority that then accepts or rejects the report of the resolution professional. And if it's accepted, then all the claims of creditors are invited. And then there is a repayment plan for payment of creditors who will all at some point take a haircut. This may not be too relevant for a lot of you, but if some of you have businesses in terms of the medical profession, hospitals, etc., it is something to be cognizant of, not to be worried about, but cognizant of when one is considering estate planning. So a lot of people ask me, how do I go about, planning my estate, planning my succession? And it's not as complicated as one can imagine. It really boils down to your personal decisions, choices, wishes, and what you want your estate to be dealt, how you want it to be dealt with, maybe during your lifetime and even after your death. So I normally suggest to our clients that the easiest way to really start the exercise without it being something daunting, confusing, or scary is this four-step process. One is taking stock. And what does that mean? You make a list of all your assets. You try and understand which are the core assets, which are the ones you want to retain for long term, which seem to be short term, and the importance of each of them. The second is to decide whether you want to divest those assets during your lifetime or after your death. Now, what this means is that sometimes what people feel is that because of the introduction of inheritance tax, or possibly because of a concern over creditors or tax demands, or because they just are concerned that if they make a will, that perhaps some heirs may challenge and the entire estate gets tied up in that challenge, that perhaps we should try and divest a part of our estate during our lifetime. And those vehicles ordinarily that are adopted for divestment during one's lifetime are either gifts or trusts. And I'll go more into detail a little later into the trust structure and how it's beneficial and why people do it. So the second step would be really to decide whether one wants to deal with everything in one's will. And obviously, divestment doesn't necessarily apply to everybody. There may be people who feel that I think it's better that I wait and just make a will, and I will not have any issues with family members or challenges. I'm not concerned about inheritance tax or creditors, etc. So I'll just make a will, which is absolutely fine. It is absolutely a personal choice, and there is not necessarily any compulsion to divest during one's lifetime. The next step is identifying beneficiaries. And what that means in essence is, what do you want to give to whom? To your wife, to your children, to attendants, to your parents, whoever. And this again is a absolutely personal choice. And I sometimes have people who come with their children, who come with other family members, and they sit down with me, and they're confused, and sometimes, unfortunately, family members confuse them even more. So what I tell people is that this is a very personal exercise. These are your assets. They belong to you. They are some assets which you have worked all your life for. And therefore, it is a personal decision which should be your own personal decision and not influenced by others. So therefore, sitting down, trying to think about who requires what, who you think should get what, is a very important exercise. Lastly is the vehicles, which I mentioned, two, which are wills and trusts. There are also gifts and family arrangements. So these are the four principal vehicles of estate planning and succession planning. Wills I've already touched upon, but I'll go into a little bit more detail here. A will is an instrument which is the only document that takes effect once somebody is no more. It does not operate during one's lifetime. Unfortunately, we don't have what we call living wills in India as yet. And there will be some time before that actually, a machinery is put into place for that. So basically, when one makes a will, one sets out in that will what and how the estate should be dealt with. Typically, a will has an executor, that is a person who administers the will and deals with the assets after one's lifetime. So the entire estate vests in the executor, and the executor will, in accordance with the will, distribute the estate to the beneficiaries. A will does not have to be stamped, it does not have to be registered, it doesn't have to be printed on fancy paper, it doesn't need to be notarized, it can be in handwriting. Um, the only requirement for a will is it should be clear, it should be made by the person and drafted by the person or his lawyer who it deals with, and it has to have two witnesses. That is all that is required. A lot of people feel, no, I must videotape myself, I must register the will, I must notarize the will, I must do 100 things. It doesn't matter. If somebody wants to challenge your will, you can do all of these things and more. You can take consent letters from your family members, but that doesn't stop somebody from challenging a will. That doesn't mean that one doesn't draft a will properly. It should be clear. It should necessarily have an executor or executors. It should fairly describe your estate, and it should clearly describe how your estate should be dealt with post your death. Um, as I said, the only requirement is that it should be signed by the person who made it, and it should have two witnesses, and all three of them have to be together at once. I'll touch upon registration. A lot of people believe in registering their wills, which of course there's nothing wrong with that. The only problem is with when one gets into registration, in time to come, if you do change a will, you'll have to keep on registering the next one. The only thing that registration does is help identify that the person who made the will is actually that person. It otherwise does not certify or strengthen the will. Now, I also touch on whether probate is required or not. Typically, and you must have heard the word probate, typically, if you are a Hindu and you're living in the state of Maharashtra and you die leaving immovable property, probate of your will is compulsory in law. And what probate effectively means is that you have to apply or petition to the court, that is your executor, after your death and get a probate of the will. The court examines the will, it sends out notices to each of the heirs in accordance with the law of succession, obtains their consent, and then certifies the will. And once the probate is granted, then the will is treated as absolutely a valid and operative will. It is usually in this process of probate that, unfortunately and sadly, problems occur because perhaps a family member will decide to challenge the will. And if they challenge the will, what they have to do is simply file an affidavit, and the probate petition converts into a testamentary suit. And that unfortunately goes on for some time until the court determines whether the will is a valid will or is not a valid will. So just to summarize, will can be a very simple document. It has to be written, it has to be signed, it has to have two witnesses. It need not be registered, notarized, or stamped, or have any other fancy formality attached. In certain cases, probate of the will is compulsory. In certain cases, it's not. The next point is trusts. Now, a trust is basically a vehicle whereby a person divests himself of a certain asset or assets, puts it into a trust. He or she is called the settler of the trust. There is a trustee who holds that asset, and they are beneficiaries of that trust, for whose benefit the trust is created. It's a fairly complex law, but I'll try and break it down. There are four types of trust: revocable, irrevocable, discretionary, and non-discretionary. A revocable trust means exactly that. That means the person who made the trust can revoke it and take back the assets he gave to the trust. An irrevocable trust is one where the person who has created the trust has irrevocably transferred the assets and therefore cannot take them back. A non-discretionary trust is basically one where the beneficiary shares are specified. That means if you have 4 beneficiaries and you say that each has a 1/4 share in the income and corpus of the trust, that is a non-discretionary or specific trust. A discretionary trust is exactly the opposite of that. That is where the beneficiaries are named or sometimes not named, and their shares are not specified. The right to determine the shares of the beneficiary then vests either with the settlor or with the trustees, or if there's a protector of the trust, by the protector of the trust. And what that means really is that uh, the person who has the control over who determines the beneficiary's shares can decide whether one person gets 100%, one person gets 10%, one person gets 0. And it's purely discretionary as the description provides. The benefit of creating a trust is that whatever you put into it ceases to be part of your estate. So typically, somebody who is concerned with a testamentary dispute erupting, or is very concerned perhaps that inheritance tax may come one's way, may decide to put assets into a trust. What happens then is that when that person dies, it is immaterial what happens, because the trust will determine how those assets are dealt with. Trust can be for a specific period of time. It can go on for generation to generation. It can provide that, for example, a beneficiary is one or more child or children, and it will come to an end when that one of the children attains a particular age, or it can continue until they have children, and so on and so forth. So a lot of people, at least in the present day and age, are looking to trust as a very flexible vehicle to deal with assets in which they themselves can be beneficiaries, they can enjoy their own assets, and then provide how those assets will be dealt with for the next couple of generations. Typically, most people will put movable assets into trusts such as investments, shares, securities, money, etc. They'll avoid immovable property because of a substantial stamp duty that one has to pay. The other benefit of a trust, which one doesn't have with a will, is that unlike a will, which may have to be probated, when you create a trust, nothing really has to be done other than filing of an income tax return. And the trustees will continue to manage the trust as long as it continues. Uh, and of course, there is a lot more in terms of trusts, which I could get into, but that would merit probably an entirely self-contained discussion on that. The next two are fairly simple: gifts and family arrangements. Gifts are exactly what they are. You gift your property, you cede title. The person who gets the gift owns the property. Some people believe in doing that. They feel that, there's a core asset or two that they don't want to keep in their will. They don't want to have disputes, and we want to give it just now during one's lifetime. There are pros and there are cons to that. You may avoid disputes, but then you also lose ownership. So it's again a personal choice as to whether you want to cede title and lose ownership. Family arrangements typically are documents which are entered into between family members for the purpose of determining how businesses, how assets will be distributed amongst them. Usually, a family arrangement will be coupled with wills, trusts, and gifts. It's more of an umbrella document so that each and every member of the family subscribes to the succession or estate plan that that the patriarch or matriarch have decided upon. It's not entirely free from dispute. There are people who go out and challenge family arrangements, but sometimes in more complex situations where one has businesses and assets, people feel it's necessary to sit down with their family members, chalk out how the businesses and assets will be dealt with, get everybody to put a signature down on paper, and try and commit them to honoring that in time to come. I touched a little bit already about wills. And this is just a little overview. The legal requirements I explained is that has to be in writing, signed, and witnessed by two people. Registration and safe custody is not compulsory. And the basic elements of a will is it should be cleared. Preferably, you have an executor. You should set out what your assets are, and you should bequeath the assets to whoever you would like to. Again, this is a small summary of what kind of trusts we have. I've dealt with revocable, irrevocable, discretionary, and non-discretionary trusts. I'll also deal with the difference between non-testamentary and testamentary trusts now. So what I described to you a little earlier was a non-testamentary trust, one which one creates during one's lifetime, in which one loses control and ownership of an asset, puts it in trust. A testamentary trust is one where the will that you make creates a trust. So to give you an example, let's say that you have certain assets and investments, and you want to give those to your grandchildren. You would like those assets to be retained and controlled until they reach a particular age. And this is, of course, just an example. There could be many others. So you can, under your will, create a trust whereby either the parents of the child or the executors of the will hold those assets in trust for the grandchildren until they reach a particular age. And that will also operate, so to speak, as a trust deed and guide and empower the trustees as to how to deal with the assets, how to invest them, what to do, and what will happen once the date of distribution occurs. So effectively, the trust will come into effect only on the death of the person who has made the will, unlike a non-testamentary trust, which will come into effect when one creates it. I touched on gifts, and let me again sort of do a little more of a detailed description of how gifts are made. So let's say you want to give a gift of an immovable property. In law, a gift of immovable property has to be in writing. It has to have two witnesses. It has to be registered, and only then it is a valid gift. Unfortunately, during my 30 years of practice, I've seen many gifts coming my way, which unfortunately do not meet this basic criteria. People, unfortunately, are advised to execute a gift deed, they won't register it, or they won't have two witnesses. So therefore, if you do plan to go out and make a gift, bear in mind that if it's immovable property, the two major components are having two witnesses and it being registered. Now, you may see the slide here saying restriction on transfer life interest. This is just a little bit of a aside on gifts. So there are a number of clients of mine who have gifted properties to their children or to other family members, but they want to retain some control over that asset that they gift. And one of those is by having the right to remain in possession and enjoy that asset during one's lifetime. So what they do is that in the gift itself, they will incorporate a restriction on transfer and create a life interest, which means that they continue to live in the asset, the property, and during their lifetime, and they cannot be evicted. So while the ownership will pass to the donee of the gift, the donor will continue to have control by way of possession and by restricting transfer. As far as movable property is concerned, it's a little bit easier. Movable property can be gifted simply by delivery and acceptance of delivery of that movable property. So therefore, most people will find it much easier to gift shares, securities, or other assets by simply executing a letter, having two witnesses, of course, and having an acceptance of that gift and delivery of that gift of movable property. This is a small slide on family arrangements. I know there's a lot of information I'm sort of throwing your way, but I thought that you should have a general overview on this. And then, of course, if you have any questions, I'm happy to answer them. So family arrangements, as I explained to you, is a vehicle whereby you get the whole family together or some of the family together and record how you will deal with certain assets and businesses. Um, if you have an agreement of family arrangement which actually transfers assets or deals with assets, um, then of course it has to be stamped, it has to be registered. If it's merely a recording of a family arrangement, there is no registration required. The only difficulty with a family arrangement is if somebody decides to be naughty and fool around, you have to enforce it. And that usually means an arbitration or litigation. But that doesn't mean it's not an effective instrument because you do have a recording of uh, of what the family desires will happen over a period of time. Um, this is I think an overview of what one would want to achieve and what objectives one would want to have in a succession plan. And as I started off by saying, not all of this will apply to everybody, but I'll go through it nevertheless. So one is, of course, ring fencing core assets from claims, right? Whether it be the government, taxes, creditors, etc. Securing dependent family members through transfer of assets by gift or trust. So let's say you have a vulnerable family member. You don't want that the estate gets tied up in a dispute, testamentary dispute over a will. You may want to set up a trust and secure that family member and prevent third parties from, trying to attack that asset. Um, in the case of businesses, sometimes personal assets of one's, which one is using, like a flat, is actually not held by you, but is held by your business. And that happens quite often with businessmen, sometimes with professionals, that you'll have a company and that company will own your flat. Now, sometimes what happens is that if that company has gone out and borrowed money or has some liability, you run the risk of losing the asset. And therefore, what happens is part of the succession plan would be also identifying if I have a core asset, if I have an asset which is very important to me, which I want that it goes to my next generation, or it's even protected during my lifetime, one may consider moving that out of a business asset or business entity. The next objective, of course, which I've touched upon earlier, is that assets are clearly divided between family members. Joint holdings are kept to a minimum to eliminate disputes. And what that means effectively in plain English is that when you make a will, when you plan your succession, one of the things you should consider is trying to distribute your assets in such a way that you avoid joint holdings. Sadly, there have been number of disputes, and you must have read about them in newspapers, and it's not new. It's happened for years and years, that when you give one asset to more than one person, sometimes fights erupt over the use, the enjoyment, and the sale of that asset. So as far as possible, I advise clients that as much as your children love each other and should continue to love each other, don't put them into a position where they stop loving each other by giving them one asset where they have a difference of opinion over. If you can, and if it's feasible, try and divide your estate as equitably as possible, and where each of your children or each of your family members, as the case may be, becomes the sole owner of the asset as opposed to joint holdings. Of course, this sometimes is not possible, and not necessary also, but bear that in mind. And the last point is really, whatever succession plan that you devise, um, you should consider the interests of successive generations. Uh, at the same time, you must take care of yourself as well. It's fine to provide for the next generation, but I always tell clients, start by taking care of yourself. So make sure that whatever you do, You ensure that you have your own security, you have your own control, and that you plan in such a way that when you are no more, your family members are secured, are free from disputes, are free from the taxman, and continue their cordial and happy relationship. So that sort of concludes my talk. I hope I've been as clear as I could have been, and I'm open to any questions that you may have.
Fantastic. Very nice, sir. It was absolutely an eye opener. Maybe for all of them, I think it should be a real eye opener.
Well, thank you.
Kulin sir, पहला हमें बोलिए.
Yes, I have one or two comments and a question. Let me ask the first question.
Sure.
Comments is, there is some general question in many people's mind that will or trust or whatever is to be made, should it be made by a chartered accountant or by a legal person? Now I'm going to give my opinion that it has to be done by a legal person and not a chartered accountant. This is my opinion. I don't know what Mr. Miskita has to say.
That's a very difficult question and a loaded one. But look, let me tell you, there are a lot of very intelligent chartered accountants out there, and there are a lot of stupid lawyers. While I would say that I agree with Dr. Kothari that obviously, especially matters concerning the law should be dealt with by lawyers. And it would be prudent to go to one. If you have a brilliant chartered accountant who's used to doing it, well, that's also good. Just ensure that that you go to somebody who knows what he's doing. I think that would be my answer, because I've seen a lot of awful documents which have resulted in massive litigation over the years. So you do need to be careful.
That's why I gave my personal opinion also, that a person who is experienced in these kinds of laws and a legal person is a better person, in my personal opinion also. And I've done, let me here, they're all close friends. I can tell you very openly, I've done my will and I've done a trust under my will also in that thing what Mr. Miskita said, and it's done by him. And he has made a wonderful document. I can tell you, I had done my documents 5 years back and 10 years back also, which I've changed, and this is one of the finest documents. So that's but my question is, when you said probating a will, so is the probating required only for immovable properties, or in general also it is required?
So let me put it this way. Sometimes it is a compulsion, and sometimes it is the law. So I'll give you both the examples. If you own immovable property, then yes, probate would be compulsory. Not even in the case where, for example, your society simply transfers the flat to you by virtue of nomination, would you get a perfect title? So that's a big misconception, that I've made a nomination and therefore the nominee gets a flat. Actually, that is incorrect. In fact, there's been some WhatsApp ping that circulated for the last couple of years over a West Bengal judgment. A nominee is only a person who the society deals with pending administration of the estate. A nominee doesn't become the owner of the flat. So therefore, one must make a will, and if one has immovable property, you would have to probate it. If you're Hindu particularly. The second part is compulsion, where, for example, there is a movable asset, which is, let's say, a bank account or a investment in a shares, where the person who made it was a single holder. There, the bank would not allow you to access that as a beneficiary unless you have a will and it's probated, or you go out and get a succession certificate or letters of administration. So that's where it is a compulsion. Typically, let me be frank, if somebody does not have immovable property, only has movable properties, they have joint holders and nominees, you don't need to probate the will. You really don't.
Any other questions from who is moderating the questions? I think Rajiv or
Rajesh.
Rajesh is there, but yeah. Rajiv, any more questions
Rajesh.
from you? Or
No, thanks, sir. Rajesh is going to moderate.
Yeah, Rajesh.
Yeah, I don't. I don't have any questions, sir, in fact.
Okay, I have one or two questions, sir.
Of course.
Viren sir, excellent talk. I mean, I was so impressed. Nobody has given such a clear concept of in such a short time. I mean, almost you have covered a book on that
I hope I'm not confused anybody, but
No. That is why a lot of questions come up, na? Because you have well understood. If you have not understood, कोई प्रश्न पूछते ही नहीं ये लोग. So that is one way we take it, and otherwise you have fully understood. Is the other side. What I wanted to ask you is regarding the bank accounts and all. You of course try to clarify a little about it. What is the safety precautions when you're alive regarding bank accounts that you don't end up in litigations later on? What all should be done?
well,
Because
see,
that's a big issue post your death, which the successors are going to face. How do we go about it?
so let me divide this into two categories, right? What happens is that if you have all the heirs and beneficiaries all on the same page, and and that happens in a lot of cases where families are close and there is no chance of anybody trying to dispute, then it's pretty simple. You make a will whereby you clear about who gets what. You introduce joint holders into the bank accounts, so that what happens is that after your death, you don't have to run out and get a probate if there's no immovable property involved. And the heirs, the joint holders, can access the money without too
Correct.
much difficulty. Um, and then what happens is that the family members get together, they distribute the assets and the monies, and they sign whatever writings and close it off. Where the complications occur is in one of two cases. One is where there is no joint holder, and the second is where either there is a will or no will, but the family members start disputing, and that's where it gets messy. Because um, I'll give you a simple example. Let's say you leave a will, you bequeath everything to your wife, uh,
Good.
right? Your children decide to challenge that will and say that, what, doctor was under undue influence. His wife forced him to make the will, right? Sadly, that dispute will take that will and the whole estate into a freeze, a deep freeze for several years, because until the court determines whether the will was valid or not, um, unfortunately, it's stuck. And therefore, and that is why actually some people are moving a little bit to trust, because they feel that, what, once it's in a trust, if I've got something put aside, no family member can touch it on my death. It goes to the person or persons who I like, who I wanted to go to. So to answer your question, I know that I went a bit around.
Yeah.
What I would say is have joint holders of the bank accounts, make a will. If
In
one
joint holders,
falls,
sorry to interrupt you. In joint
yeah.
holder, it should be both them or both of them operating or either or survive.
So that's a good question. If you want operations of the account yourself, it can be just simply that it is you, and then after you're no more, it is that joint holder, or it can be either or survivor, right? I would not suggest joint operations. That becomes very difficult.
Very difficult, yeah.
Yeah.
Right. You need to have a death certificate of that person to prove that he's now gone,
Oh
and
yeah,
then
yeah.
you
Oh yes.
transfer it to the solo this thing. That is what comes up. I have faced it in
Yes.
my family because my father had the bank accounts and it was a problem to get it rectified. Yeah.
Yes.
Unless
Yes.
we submitted all this, it came to a big problem. Now, one
Yes.
more question is regarding the divorce part, sir. There are a
Mhm.
lot of divorces happening. Courts rulings are there where they
Right.
have an annual one-time maintenance is given, where
Hmm.
nothing of the property is going in. Sorry. Uh, Nothing of the property is given allotted to your wife by the court, but a
Hmm.
lump sum amount is said, Baba, you give this much and settle it. That is one.
Hmm.
And
Right.
second is every month you are supposed to pay something. Now,
Maintenance.
suppose in such cases, if the husband who's doing the what we say permanent alimony, he's trying to pay it off, and he expires, does the wife still have the right on that property, which is not
Yes.
bequeathed by the court that
Yes.
time? So it is going on as a single one-time what we say alimony has been given, or monthly alimony over a period of till the lifelong you are supposed to give?
Well, partly
How do
it
you go about
depends.
this?
Partly it depends, and I'm not a divorce lawyer, but I do know a fair bit about marital law. It depends on the divorce decree itself, right? And if the decree itself provides that it'll be paid during the lifetime of that person, right? Of
Yeah,
the
specific
person
amount
who has to pay it,
going every month and
yes,
nothing else.
then it is possible that if that maintenance is to go on, it will be payable by the estate as well. Yes, after the
Okay.
death of that person, because you see, it is maintenance for the spouse, right?
Okay.
And therefore, of course, there can be a challenge to that as well. It's not as clear cut as one may imagine. That one can say that if that person is who had to pay the alimony is no more, he's not earning an income, etc. So it depends very much on how the divorce decree is constructed. But
Okay.
yes, it is possible that it can attach to the estate as well.
Okay. So what exactly has that person to go? We approach the court and see that it is settled one time. That is better. So the succession partners later on, after his death, the other people who are alive are
Yes,
they don't enter
yes,
into the litigation. You
yes,
understand my point?
yes,
What I'm trying to tell you.
yes,
Yes,
yes.
sorry to interrupt, but what's in your mind?
Super, sir.
What is in your mind? You're asking such questions.
No, there are certain family relations which is
No,
which is
I'm
happening.
just joking. I'm just joking. I'm just joking.
Anyway,
So no, yes, you should. Look, ideally, I would be very frank. A one-time settlement is the best. Is the best because you know, if it's a divorce, in any case, it's not going to be a happy situation. So you know, a clean cut is the best. Yeah, avoid lawyers
there
as
is,
much as possible.
there is another angle to it. You don't get a divorce and you still pay the permanent alimony. Does she have the right to the property straight away by the succession law?
Or if you don't get divorced, she's an heir. Of
Yeah,
course, of course, of course,
she
absolutely.
has a full right in spite of
Yes,
the court's
e-
this thing decree.
absolutely, absolutely.
Okay.
Yeah, because you see, a spouse under most personal laws has a share of the estate, and therefore, if there is no decree of divorce, the person is still a spouse.
Okay.
Yeah.
So the succession laws apply fully to her too. That is
Oh,
what it.
absolutely, absolutely.
Okay, that's fine. There are a lot of more questions which have come up. Rajesh, are you going to ask one by one, please? It's in the chat box. Okay.
Chat box, sir. I can't see any questions there.
Okay. I'll ask. Is there costs involved in forming a trust and tax implications?
So there, apart from the lawyer who you engage to set up the trust, there is no other cost other than stamp duty,
Okay.
which is 5% of what you settle. So normally what we do is we settle a trust normal corpus to begin with. You settle, let's say, 1 lakh of rupees, which is 5,000 rupees stamp duty. And then whatever else has to be put into just one case, which then there's no stamp duty. The only other cost really is you have to file a separate income tax return for the trust, get a separate PAN card, which is a fairly simplified process.
Okay. Is a medical certificate required for the person making the will?
I see if the person is elderly, I would suggest it, because typically what we see with old people is that there's an allegation that they're not of sound mind. So it's prudent. Why not do it? Of course, that is not the only ground that one can challenge a will. One can say that, you know, say the person was of sound mind, but was under pressure, force, duress, coercion, fraud, etc., was drunk on drugs when he made it. So there are 100 different reasons. But yeah, why not? Why not? It's worthwhile doing it.
Okay. There is one
So
more
you're on the
question.
subject, Jignesh. So typically, if I give my example, I have made a trust for my grandchildren under the will. So the will is there, but eventually in certain situations, a trust can be formed if that situation and conditions are predefined, and that trust remains for a few years, and that X amount can go to my granddaughter when she becomes, say, 35 years old or 40 years old, and Y amount goes to my grandson when he becomes certain age. Everything. It can be customized as per your wish.
Okay, okay. Oh, that's a very good thing. Another question is, we have a commercial property in name of my mother. She passed away in January. I have a will and a nomination done both in my name. Still, the society lawyer insists to have a probate. Is it necessary? This is a
Yes.
YouTube question. One of the.
It is because just a question is it a Hindu?
Yeah, in the YouTube, somebody is watching is asked this question.
Okay, so it is very much compulsory. Yes, it is mandatory.
So one allied question is typically how long a probate procedure takes, and how much it cost about approximately.
So let me explain. To reach the point of filing a probate, it usually takes a couple of months, because what happens is we need a fair deal of information regarding the estate to fill in, right? And to prepare the petition. So you count about 2-3 months from the time you start to filing of the petition. The petition typically takes between 6 to 8 months. So you're talking about a year to obtain probate. Court fees are 75,000 rupees, clerkage, etc. So typically a probate would cost, I would say, depending on the complexity of the will, between 2.5 to 3.5 lakhs for a probate from start to finish.
Okay. And it will take at least about a year's time on an average.
Sadly, yes, because our High Court is quite overburdened. I mean, we have managed to get a little faster in a couple of cases, but it's typically 6 to 8 months.
But the best thing for lay people like us is to go to a good lawyer like you, and then give him or her all the papers, and they will do the needful. Is that correct?
Well, yeah. Whether it's me or any other lawyer, of
anybody,
course, yes. Yeah, it would be a fairly straightforward process. They don't have to do much except supply information on the estate.
Yes, rather than trying to do ourselves.
Yes.
I said the documents required are mainly the papers, your estate papers, whatever you have.
Correct.
The valid document, that is mainly the
names of heirs,
sales agreement, or you have the stamp duty register, everything that you make it a possession, you have your own possession to show it. What all exactly are the valid papers? What are the valid papers required for probate? In short, that is what I'd like to ask.
Okay, so basically you need an affidavit of the executor of the will. You need affidavits of consent of each of the heirs. You need an affidavit of one of the consenting witnesses, and you need details of the entire estate. That means description of each and every asset and the value of that asset. That's broadly what you would need. Besides that, death certificate, Aadhaar card of the person who's passed away. If let's say somebody predeceased that person, let's say, for example, mother has passed away, father passed away before that, then death certificate of father. So this is broadly what we would need for probate.
Okay. And who is the right person to be the executor of the will? The first thing you said, the executor should be a trusted person, or any XYZ you have it? How
no, that's actually an excellent question. In my opinion, the best person to be an executor is a family member. Don't appoint friends, don't appoint lawyers, don't appoint chartered accountants, don't appoint anybody else but your own family, because the executor is the person who holds the entire estate. Although the executor is prohibited from dealing with anything beyond the will, they can create havoc. So my advice would be family members should be, and that too not too old. Somebody who is, a fairly reasonable age. Sorry, doctor, you were.
Yeah, so I would make a comment here, because I was under a wrong impression earlier that an executor should not be or cannot be a beneficiary, which I think that myth was removed from my mind by you only. And executors can be a family member, or he can be a beneficiary also. Only thing, the witnesses cannot be the beneficiary.
Correct.
And who can be the witnesses? Trusted witnesses, your family friends, or it could be again lawyers or somebody?
Yes,
Or a
so
chartered
we can
accountant?
witness. It can be a lawyer, it can be a chartered accountant, it can be a family friend. The only rule of thumb I would probably say is try and get somebody who is will cooperate and who is not too old, because that person will have to give. There'll be two witnesses. One of them will have to give an affidavit. So I recently had a case where the witness refused to give the affidavit, got scared, and we tried to explain to him that really it's not a problem. Giving an affidavit doesn't mean you're going to be dragged to court. It's just a formality. But he got scared. So somebody who's close as well
Trusted
as
and
also
true.
not too old. Yeah, yeah.
So one more, I think, feeling people have is one of the witnesses should be a doctor. Is this how far it is important?
Uh, Really, it makes no. You can have a doctor, you can have a lawyer, you can have the president of India being the witness. It doesn't change the position, because a witness only has one duty, is to say that this person who made the will signed in front of him. He is not to testify as to whether the person was of sound mind, disposing capacity. So let me give you a very simple example. Let's say I get two doctors to be my witnesses, right? And let's say my wife has told me, make your will, give me everything, you have to do it, right? How are those two poor doctors going to figure out that I've been forced to make my will, right?
It's not only for will, for everything else, wife can get the things done in their own.
I won't comment on that one.
Asha, regarding the will, once can you have a audio will also? A person who does it in the last stages, and you have
Look, let me tell you one thing. You can videotape yourself, you can take photographs, you can, do whatever you want. But if somebody wants to challenge a will, the whole process still has to go through. So a lot of people are doing this. They're videotaping their will. They are, calling people, they're doing whatever it is to try and prove that they made the will. But let's understand one thing, that the law is the law. And if there is a challenge, the whole process will have to go through court of law. Perhaps that video will help. I don't know, to establish that, that person made the will. But let me be frank with you, it's a racket. People are just doing this and making money out of it, videotaping themselves, and I don't think it'll
best,
make a difference.
best is a written will, and if it is
O-
registered,
only
go to that.
only it has to be written will. It cannot be audio, it cannot be video. You can videotape somebody signing the will, but the will itself has to be in writing.
In writing. Okay. And as you rightly said, it need not be registered. It will still
No,
be valid in the court of law.
absolutely.
Okay. What happens if the executor himself is no more, and the witnesses are not ready? What happens to such a will then?
So
What course
one
does
is,
it
of
take?
course,
And yeah, sorry.
one is that I advise people to have an alternative executor. So if let's say you appoint ABC, if ABC passes away, then you, in your will, you say it'll be DEF, right?
Okay.
Okay, so that's one way to eliminate that. Have an alternative executor. If there's only one executor and he or she passes away, it's not a problem. You file for letters of administration of the estate with will annexed. So we're getting into a slightly more complex
Yes.
question on law,
Ah,
but basically, let me explain. When you have a will and that will appoints an executor, you probate that will. When you
okay.
have a will where there's no executor, you go to court with a petition for letters of administration with will annexed, which means
Okay.
there is a will but no executor. And then there's a third petition for letters of administration where there is no will at all. Okay. So
Okay.
I think we are going into too much of technicalities.
it is,
નહીં, sir, એટલે પૂછ્યું કે ભાઈ આ છે અહીંયા બધા 2-3 cases have come up, so that's why I'm asking.
Yeah.
It's going on in reality.
But all the possible situations are difficult to be discussed here.
I know, I fully understand. So, big thank you. I think we are coming almost to the end of the session. Any more questions? Anybody has it? Otherwise, we'll call it a day. Rajesh and Anmol, is there any question on the YouTube and FB? If you can post it or let us know. Otherwise, we should conclude the session soon.
Yeah, I also would like to make one last comment that people feel that to make a will through a good lawyer or legal person is very expensive. It is really not that expensive. I mean, these are the practical things what people, and a lot of people, how many they charge lakhs of rupees, and it's not really like that. It is reasonably charged by a good lawyer, and it should be done. In my opinion, all of you who have not done it, please do it yesterday.
Okay, there are no more questions. So, quick Thanksgiving for, I would just like to have a concluding remark. Mr. Viren Miskita has explained us in such a nice and a simple language how to go about this plan of succession, making of the will, regarding the gifts, making a trust. And it was a pleasure to hear you, sir, and understands the nitty-gritties of such a difficult subject made so easy by you. I'm extremely thankful to Dr. Kulin Kothari, sir, who has seen to it that we have the best of the person to let us guide us on such a difficult subject. And you have readily accepted his invite. I am on behalf of the Maharashtra Ophthalmological Society. I really thank you, sir, for such an immediate agreement to come and deliver this talk. A small video of intro before we conclude the session, a gallery view, and then Dr. Rajiv Mundra is going to give the official vote of thanks to everybody. So, can you play this thing quickly, Anmol?
Thank you. Really appreciate it.
Thank you. It is absolutely my pleasure and honor.
People to have shown your video, and Mr. Viren sir to bear with us for that moment. And we'd like to have a quick gallery view. Let's have all the videos on. So it's for a posterity and this thing that we have done this webinar with you, sir. Let's have the video on, everybody. And Anmol, a quick gallery view, please. Photograph. Anmol, are you there?
It's done, sir.
Done. Okay. Over to you, Rajiv, for the official vote of thanks before we sign
Sir,
off.
here you have already given vote of thanks, but just I'll complete my formality.
Yeah.
I think doctors are supposed to be highly literate people, but I think this is the one of the aspects. Finance is one of the aspects where we are really illiterate, and this is one of the topic. Planning of succession is one of the topic where very little knowledge we have got, except few people like Kulin sir. All others are very illiterate about all these things. I'd like to thanks on behalf of MOS, our top-ranked real estate lawyer Virenji Miskita, who has delivered a very good in-depth lecture about this section of planning of succession in his very lucid language. And I hope all the viewers who are here, they will be helped out of this. They'll be benefited out of this. This financial literacy committee, and the main pillar of this committee, Dr. Kulin sir, who is also my guru, is always eager to teach us, whether it is ophthalmology or money matters. Thanks, Kulin sir, for this, for calling Virenji Miskita and for your comments.
I'm also a student for all these things forever.
Highly energetic President Dr. Jignesh Taswala. I think he's working for another 7 presidents. Next 7 presidents is working for that. He has got packed program throughout the year for all the MOS members. And our secretary, who is silent but swift, Rajesh Joshi sir, who is working, who is backbone of our MOS. And also thankful to all viewers who are present over here for this webinar. Last but not the least, Entor people who has provided this platform for this webinar. Thank you all. Thank you all for this nice lecture.
Thanks a lot.
Thank you.
Each one of you a big thank you. Sir, Viren sir, we'll have more of
Thank you all.
with some other topic, of course, with Kulin sir's permission.
My
And
pleasure, my honor. Thank you.
It was so nice of you.
Thank
to
Thank you, Mr. Miskita. Thank you so much. Thank you.
Thank you,
Thank you
doctor.
very much,
Thank
sir.
you.
Thank you, Viren
Bye.
sir. Thank you, sir.
Bye-bye.
Vignesh sir.
Bye-bye.
Bye.